We've been discussing yesterday the Reserve Bank has cut interest rates for the first time since November 2020. 0.25% to 4.1% is the official cash rate now. To talk to us about this, we're joined by the co-founder of Macro Business, Leith Van Onselen. Leith, good morning.
Yeah, g'day, Stephen. How are you?
Very well. This seems like a strange decision, particularly given that most commentators were suggesting it was a bad idea. And the Reserve Bank in their announcement almost said we probably shouldn't have done this.
Yeah, well, not really, because most economists in the financial markets actually tipped the cut, so it was sort of, it was within expectations.
Yeah, but what I mean is that most people said it shouldn't have happened. I mean, we all thought it was going to happen, but the conventional thinking was it shouldn't have.
Yeah, well, I mean, yes and no. It was basically a two-sided equation here. So effectively, inflation has fallen within target. If you take the last two trimmed mean or underlying inflation measures, that was tracking at an annualised rate of about 2.6%.
Yep.
So that's within target. The unemployment rate is obviously the sticking point. So the unemployment rate at 4% currently is going to we get the next read in a few days. Is tracking below where the RBA was expecting. So that is the pressure point. But at the same time, we've got obviously a per capita recession. The economy is growing much slower than the RBA had forecast. And also we've got slower wage growth. So they basically noted that inflation pressures have eased, but they did also note that there are some upside risks with the labour market particularly. And the RBA did also say that they are keeping the cash rate at what they call a restrictive level. So, most economists and I believe the RBA think the cash rate, the neutral level, which is sort of the level whereby interest rates aren't adding to demand or subtracting from demand, is about 3.1%, and it's currently at 4.1%. So the RBA is just basically keeping rates restrictive. It's just a little bit less restrictive than they were. So I think that's the thinking, and they said explicitly in their statement that there are still some upside risks, most notably around the labour market, and that they're going to keep an eye on the data. So it was what I'd call a hawkish cut, in that they've made it a little bit less restrictive, but they've also said they are alert to the upside risks, particularly around the labour market tightening, and they could still hike rates in the future if the data goes against us.
So what do you think happens next? I mean, obviously a lot of people are suggesting this is going to be an election trigger. I tend to think that is probably the case. But there's another meeting on the 1st of April, which would happen before any election would happen. I mean, if there's going to be an election, the earliest it'll be, I think, is April 5. Where do we go from here, particularly given that most economists are saying that the actual living standards that Australians are suffering through at the moment aren't going to improve anytime soon?
Oh, 100%. So I guarantee that the two happiest people in the country right now are probably Anthony Albanese and Jim Chalmers.
Yep.
Because, Labor's trailing in the polls pretty much every measure, two-party but third. And the fundamental reason is the cost of living crisis. Like, Australians have been smashed. We've had a world record and also an Australian record decline in household disposable income, down about 8% since Labor came in. Mm. And so, there are obviously a lot of pressures there, and I'm sure Labor's hoping that this rate cut will, sort of signal that the worst is over, and it might give them a little bit of momentum before the election. And I wouldn't be surprised at all if Labor this weekend calls the election, for early April, like you said, and hopes that the RBA cuts at the next meeting. I don't think that's guaranteed, because basically it will depend on the next two data points that we get. And today we actually get the fourth quarter wage price index, so that'll give us a read around wage inflation. And then tomorrow we get the January labour market report. And if the labour market tightens and, say, the unemployment rate falls, the RBA is probably less likely to cut rates at the next meeting. So, another rate cut isn't guaranteed, although I do think the RBA will cut rates several times this year to get us sort of down to that neutral level. Yeah. And most economists think that they'll cut 3 more times this year.
May we live in interesting times. Leith, great to talk to you this morning.
Yeah, cheers, Stephen. Speak next time.
All the best. Leith Van Onselen, co-founder of Macro Business.